All right, good afternoon everyone and welcome to the Denali monthly webinar today for June 3rd, 2015. Today our webinar is going to be about finding the out of balance in your balance sheet and how to fix it. All right, so we'll go ahead and get started here. My name is Jeremy Beislein. I am a systems trainer here at Cougar Mountain Software. I will be your presenter today. Okay, so our agenda today is we're going to talk about your balance sheet or your general ledger being out of balance. We'll give some examples of why that could possibly happen, and if it does happen, what we can do to fix it. So for our topics, we're going to talk about the balance sheet itself. We'll go over the couple of different reports, the balance sheet versus the trial balance, and whether it's out of balance or not. We'll talk about the report parameters, because that is the number one reason for out of balance. We'll talk about the advanced report groups that may be throwing it out. Then we'll talk about how to recalculate the period tables. And last but not least, we'll talk about how to find the out of balance after all the previous steps have not brought us back in balance yet, and then how to fix that with a one-sided journal entry if needed. Okay, so we'll go ahead and get started. So Denali has the balance sheet report. There's also the trial balance report, but there is a difference between those two reports. It's very important to understand that. When you run your balance sheet report, you put the ending period you want to see the account balances for, such as right now our fiscal calendar, the current year is still in 2014 for our demo company. So for our current period, we'll bump it all the way up to 19, and I typed 91. That's not going to work. So let's do 19, and now my backspace won't work. Here we go. Technical difficulties here, bear with me. So if we run the report up through period 19, then as you can see, that will be the account balances as of June 30th, 2015. These are our general ledger balance sheet accounts. So our balance sheet shows what the balance is as of the last day of the period for period 19, and these are the account balances, as we can see here. This is just a simple detailed balance sheet that we have here. The trial balance, on the other hand, that report shows the cumulative total of all transactions that posted to the accounts for whatever period range you run that for. So if I ran a trial balance for period 19 only, starting and ending of period 19, that is not the account balance at the end of period 19. That is just the total of the debits and credits that posted to all of your accounts for period 19 only. It does not take into consideration the previous balance before period 19. So as you can see, we only had two accounts that we had posted to, or three accounts we had posted to in period 19. So we show three account balances. So the trial balance is not a balance, it's the total transactions for that period. If you want to see the balance, make sure you start with period 0, which is your balance forwards, and end it with period 19. Now this is going to show us the account balance, because we're including all items from the very beginning up through period 19, as you can see here. And then the account, the debit amount is the debit balance for this account. Our account number 1030, cash in bank at Chase Bank Payroll, has a credit balance. We don't like that with cash accounts because that's overdraft. So, but that's just an example of how the trial balance looks. And of course, your trial balance includes all GL accounts, which would also include your income and expense accounts as well. Now again, it's the transaction totals for these accounts. Typically your income and expense accounts aren't really a balanced account. They're just a tracking account to keep track of your net income for your organization. Okay, so that is the trial balance report, but we're going to look at this report for just a moment. We ran the report for the entire fiscal calendar up through the current period, starting in the beginning, including our balance forward entries that posted from the previous year-end close. So the question is are we in balance? Well, the trial balance and the balance sheet both will show you that at the bottom. If the debits and the credits equal, you'll see total debits, total credits at the very bottom of our report here. But look at this, we are not in balance, we are out of balance. So we have a problem. Since we're running this for the entire fiscal calendar through the current period, this is definitely a problem. If we're only running it for one period, the chances are of being out of balance is narrowed down to just the one period. But this is for the entire fiscal calendar, so our entire GL is out of balance. And I did that on purpose with this demonstration so I can show you that. Now let's look at our balance sheet. Let's look at our nice classified balance sheet here and see what that shows. That shows the same out of balance at the bottom here, as we can see. Our total credits on our balance sheet, which is this number, does not match our total debits, which is this number up here, total assets. So we do have a problem. We are out of balance. So now the question is what causes an out of balance balance sheet to run? Why do we show an out of balance? Well, the first thing you want to check when you're running your balance sheet report is your report parameters, specifically your account filter. So if I'm running a balance sheet, but I'm filtering out accounts on my balance sheet, the report is only going to show accounts using the filter in this example that have a .01 at the end of each account. That's my second segment I've set up here for a department code. So that all I'm going to see is accounts with a .01. So let's take a look and see what that looks like. And of course, we are out of balance because I don't have any balance sheet accounts with .01, but I have some revenue and expense accounts which are summarized as the net income on the balance sheet. So that's the only thing we're seeing here. All we're seeing is basically net income of $49.66, which is a credit, part of the credit side of the balance sheet. So we're out of balance by $49.66, more credits than debits. So the first thing to check, or at least to realize is that when you're running a balance sheet report, if you use the account filter, most likely you're going to get a balance sheet report that shows an out of balance, where the debits and the credits do not equal. Because in order to be in balance, we want to include all accounts. So we don't want to put a filter in if we want a balanced balance sheet. So once we put in our filter, we clear that up. Another thing you want to check is your advanced report groups. If you're using the advanced report groups, let's run a report there and see what that shows. So I have a balance sheet report group set up for running my balance sheet report. This is the feature we talked about in a previous webinar on how you can group accounts together on your reports to get group totals, as we can see here. So I have group totals for my cash and cash equivalents group. That's a very nice feature to have, but if your report groups are not set up correctly, there's a very good possibility that your balance sheet could be thrown out of balance when you're using the advanced report groups. So that's the second thing you want to check. The most common out of balance scenario is your parameters, your filter, your account filter. The second most common is if you're using report groups and your report groups are not set up correctly, that is going to throw us out of balance. So looking at the report group here, we have one called balance sheet. Let's go take a look at that group and see if there's something that is causing that out of balance. So under our advanced report group codes, which we talked about again in a previous webinar on how to set these up, I've got one here set up that we ran the report with, our balance sheet group. Now what this is going to show you is it's going to show you all the accounts that are missing from this report group. Any accounts in red, those are not missing. They're included in a subgroup that is part of the primary group. But if the account is just in black, there's two of them right here. These accounts are not included in our balance sheet report when we run our balance sheet using this report group. So because we have a couple of accounts missing, unless those account balances are zero, we will probably have an out of balance. Now you can prevent that, or at least help you prevent that, by checking the box here on the report group that says show missing accounts warning. So if I check that box when I set up the group, and now I run my balance sheet report, if I have any missing accounts, any accounts that are missing out of this group that are not included, then it should pop up a warning and tell me that. And look, there it is. Some GL accounts may be missing, which would cause the report to be out of balance. So if you're aware of that, that might be okay. That might not be an issue. All you want to see is the numbers in those accounts that are grouped together in those groups. But just keep in mind that that could potentially throw your balance sheet out of balance, which in our example, it does show an out of balance balance sheet. So check your reports. Make sure that your report groups have all accounts if you're running a balance sheet report, that there are no missing accounts, that everything is included. Now let's say we're not using advanced report groups. We're not filtering out our accounts. So now we're going to include every account, no filter, no advanced report group. So we should have a balanced balance sheet. Cancel. So let's review that again. Period 19, I want to print the account number. And see, I didn't get the warning now because I'm not using my report groups. I'm just running a regular balance sheet, and this is just the basic detailed balance sheet. This will tell me if my general ledger is out of balance as of June 30th, 2015. It shouldn't be because we're not filtering anything out. So here's my total assets, total debits, and at the bottom we have my total credits. I can't fit it on my screen here, but as you can see, 47.18.198, 47.12.633. We still have a problem. We're still out of balance. I'm not filtering anything out here, so why are we out of balance? Okay, another reason that this could happen is an uncommon situation. You shouldn't see this, but if it does happen, it has been known to happen from time to time with any kind of a network database scenario, with any kind of networking software where you're accessing databases over a network. It is possible that in Denali, along with any other software, when you post a batch of transactions, if there's any kind of a network interference or interruption during the posting process, the period tables in the general ledger might not be updated correctly, and that could throw your balance sheet out of balance. The transaction still posted fine, but the period table, which is where the balance sheet is getting the information from in the database, might not have received the posting correctly. It's a rare scenario, but it is possible that that could be throwing you out of balance. So if that's the case, we know we've checked our parameters, we're not filtering anything, we're not using advanced report groups, we are still out of balance. So what you want to do is you want to recalculate the period table. Denali has a nice feature. It's a feature that helps you recalculate that period table if you're out of balance, and it does it for you automatically, so it's not difficult. But before recalculating, we always recommend performing a backup first. Always want to run a backup before you do any kind of a maintenance task such as recalculating. That way, if the recalculate somehow throws you way off, you can undo it by restoring your backup. So after we've run our backup, then in the general ledger, what we do is we go to our table maintenance under the options menu here, and we recalculate the period table. So now it's asking, do we want to recalculate the period table for all accounts? Unless you know exactly where your out of balance is, then yes, you just want to say all accounts. So we just leave the account number blank and it will do all accounts. If you know exactly which account is wrong, then you can put that account number in and it'll just recalculate the one account. What this does is this goes through the history of all transactions that have posted to the accounts in the general ledger, and it will add and subtract the debits and credits appropriately to recalculate that account's balance in the period table. And that will give you a correct balance sheet report. So what we're going to do is we're going to do all accounts, and we're going to just simply click OK to run that. And now it's recalculating. The recalculation process is complete. Very simple. It only took a moment. If you have a lot of history and you haven't closed out your general ledger year for up to 5 years, it may take a little longer than just a moment to recalculate, but it shouldn't take more than just a few minutes. So now that we've recalculated, now let's go take a look at our balance sheet and let's see what it shows. I'm going to run it for the current period again. We're not filtering anything. We're not using advanced report groups. We should now be in balance. Okay, so here's our total debits, $47.18,198. Scrolling down to see our total credits, which is liabilities and net worth. Oh, $47.18,196. Look at that. We're still out of balance by only $2. So our recalculate fixed most of the problem. We had a little bit of a problem, it looks like, with our table. Recalculate fixed most of it. 90% of the time, the recalculate will fix your out of balance. But in this example we're showing here, we're still out by $2. So we actually have a problem with something that either posted incorrectly or something didn't post as it should have posted during a posting process. Or maybe somebody went in and just changed one of our account balances by posting a one-sided journal entry. Now, a one-sided journal entry is possible in Denali, but it's not very likely because there are security features you have to override in order to allow a one-sided journal entry to post. So what you can do in this case, if your out of balance is only $2, at such a small amount, you might not want to take time to do the research to find it, if it's a small amount like that. So you can decide, in this case, we need a $2 credit. We've got a $2 debit more than what we have credits. We're $2 more in our debits than we are in our credits. So we need to post a $2 credit to an account somewhere to bring us back in balance. Now, if you want to just take the time to post that as a one-sided entry, then typically that would be posted to whichever account you feel like the out of balance is in, if you know what it is. If you're not sure what to do about that or which account to use, then we recommend consulting your accountant or your CPA. They will probably tell you to just go ahead and post that to the retained earnings account. Since it's such a small amount, it's not really worth taking the time to do the research to find it. However, if you do want to take the time to find it, because we're still wondering what happened here, why are we out of balance? Or if your out of balance is more than a small amount, if it's, you know, a few hundred or $1,000, we definitely want to do the research to find out why we are out of balance. We've already recalculated, so we know that all of the transactions are adding up in general ledger, but they're just not in balance. So now we do the research. The way we research the out of balance is we run our balance sheet again. We ran it for periods 19, which takes us to June 13, 2015. We were out of balance. So let's back up and run it to the end of 2014 and see if we're out of balance at that time. So this will narrow down the time frame that we were thrown out of balance. So as of December 31st, 2014, which was 6 months ago, let's take a look. We were in balance at that point. So we have an entry that was not balanced that posted since December 31st. That's what that tells me. So now what you can do is you can run it per period starting with January, which is period 14, and see if that puts us, if that period shows out of balance. January was in balance, we're good there. So let's run it to February, period 15. You can run the balance sheet report, or if you're running the trial balance, make sure your starting period is 0 and your ending period is whatever you're running it for. Either one will work to find your out of balance. So period 15 is February. In February we were still in balance, so let's keep going. Period 16, so somewhere between March and June we were thrown out of balance. So let's run it for March. And there it is. So now we have narrowed it down to March only. So in March of 2015, we were thrown out of balance. So now what we do to narrow it down even further is we go up here and we run an audit trail report. We want to run it for all accounts because we haven't narrowed down the account yet that the out of balance was done. But we're going to just run it for periods 16 to 16. But what we want to do here now is we want to run it by date because we want to narrow this down. See, if we run it to, oops, I want to go 2015. If we run it from March 1st to March 31st, we are going to see an out of balance. We already know that. So let's run it by week, March 1st to March 8th, to see if we can narrow it down there. Or to the 7th. Let's go to the 7th. We'll start the next one on the 8th. Now, when you're running the audit trail, make sure you uncheck the skip zero activity and skip zero balance. Because if you don't uncheck those, your out of balance might be hidden on this report. We want to see all accounts. We want to see everything that posted during this time frame. So we're only going to run it for 1 week, so our report shouldn't be too big. But all we want to do is look at the total of this report. We'll go to the very bottom and see if it's showing an out of balance on the bottom. The very bottom of our report here for report totals. Totals for report is balance forward is 0. Debits are 0, credits are 0, net change is 0. So our balance is 0. Now what you would see here if you're running this report is you would see all transactions that have posted during that time frame. And since we're skipping, we've unchecked skip zero activity, we should see every account on this report. But there was no activity during that time frame. So our net change is what we're looking at. If the net change is 0, we're balanced. We're good. So let's go to the next week. 08 to the 15th. And let's see what we show there. So we're running it just for 1 week. Let's go to our bottom here. Net change is still 0 for the entire report. And so our credits and debits start with a 0 balance, which it should. And our net change should have a 0 balance, which means our ending balance should be a 0 balance. That means we're in balance. The reason we start with a 0 balance forward is because debits and credits should offset each other to give us a net of 0. So we know it's not in that time period. So we go to the next time period. Oh, 3/16 to 3/23. So we're doing this week by week until we can find that out of balance. And we got our 20-page report. And look at that, we just found it. So we have debits and credits, but we are $2 net change, $2 debit. So we are missing a $2 credit somewhere. And we've narrowed it down to that 1 week there. So now that we've done that, we can go back up and look at our report to figure out which account is out of balance, which account is showing that out of balance there that doesn't belong. So this is going to show every account. So we're looking for a transaction. So we have a transaction right here. We found our first transaction on the report for $98. And if you want to narrow this report down, what we can do now is we can run a reprint posting to narrow that down. 16/2015 to 03/23/2015. And this report will actually show the debits and credits of everything that posted to all accounts during that time frame. So this will show us. It's our reprint posting report. That's what we're looking for. This is only a 1-page report, so it's a much simpler report. We're not looking at every account. All we're looking is every transaction now during that time frame. And as you can see, our debits are $2 more than our credits. So that's the report you want to run once you've narrowed it down on the audit trail. Run the reprint posting report in the general ledger. I'll show you that one more time. Reports, reprint posting right here. That's the report you want to run. Then put in the date range that you ran the audit trail for that showed the out of balance. And I recommend printing detail because that will show each debit and credit separately with all the detail. So now here's our report. So we have a credit of $100 and a debit of $100. That one matches, no problem. Our next transaction, we have a debit and a credit and a debit. Now we're a little bit off on this one. This was on the 20th, 2289.62 and 2186.35. So we should see a difference. Here's the difference, 150. So we have a credit and a debit that gives you that difference here for the same transaction. Transaction 1, line 2. This posted from accounts payable. It's the same reference number. That's what we're looking for. So all the debits and credits that add up in this reference number are equal. So we're good there. So now we have one down here. The next transaction, this is our reference number, has a $98 credit, same reference number, and a $100 debit. But look at that. There's no more entries for that transaction. So we've just discovered where our out of balance is. We had a $98 credit to petty cash and a $100 debit to notes payable. So that's where our transaction was thrown out of balance. That's the transaction. So what we need to do to fix this is we need to either post a $2 credit to petty cash or to some other account to offset that out of balance so that this becomes $100 instead of $98. So what you do is you take this report, you notice the transaction date and the amount that's out of balance here. And in order to fix this, we're going to have to do a one-sided journal entry. It's the only option that we can do to fix that. So that's where you need to get your supervisor, your accountant, or contact customer service at Cougar Mountain for us to help you with the one-sided entry. I will show you how to do it real quick on this webinar, but this is, we're talking about overriding security settings, so unless you have the security rights to do this, you will not be able to do it. Since we're logged in as supervisor, we have rights to all aspects of accounting of Denali to unlock that option for the one-sided entry. So the first thing we need to do is we need to go into our module preferences in General Ledger, and we need to check the box to allow unbalanced transactions. That's our first step. Now remember, only users that have access to module preferences can do this in General Ledger. Once we've done that, we close out of General Ledger, and then we have to go into our security settings in the controller module and choose one of our users that we can modify the rights to. Choose our supervisor. We cannot use the supervisor user itself because the supervisor cannot be modified. The rights to supervisor you can't change. So we have to pick another user that we've set up. In our demo company, we've got Bill set up where we can actually go in and change the user rights. Because even though we've allowed unbalanced transactions, General Ledger will not allow the posting of those transactions unless the user that's logged in has the right to post an unbalanced batch. So we got to give that user under the General Ledger options, under the journal entries, to allow out of balance postings right here, to post the batch once you've entered the transaction. So we'll go ahead and check that box for Bill. We'll give Bill the rights to do that since we cannot give supervisor the rights. Now that Bill has the rights to do that, now we need to log in as Bill. Otherwise, we will not be able to post anything. So now we're logging in as Bill. Again, if Bill had a password, you would make sure that you would enter that in. But for our demo company, we've left the password out. So now we'll go back in and make our one-sided entry. So here we are in the General Ledger. We're going to go ahead and create a new batch. And then we're going to make a journal entry. Now remember, we want to look at our reprint posting report because we've identified the transaction that threw us out of balance. And that was on March 17th. And it was the petty cash account that needed a $100 credit, but it only got a $98 credit. So we're going to credit the petty cash $2 to bring us back in balance. And you notice I don't have a debit on this entry. This is a one-sided entry. All we're going to do is post a $2 credit to petty cash with no offsetting debit. So we're going to save that since we've allowed ourselves to do that. And now we're going to post the out of balance. Now when we post, we get this warning. It says you are in the process of posting an unbalanced batch. Because you have the security settings which allows this to turn on, you can go ahead and post. But it is not recommended. Are you sure you want to post this? Now yes, it's not recommended, but in this case we have to do it in order to fix our out of balance. So we're going to say yes. And now we're going to have a posting report that's just a one entry, credit entry to our petty cash account. That's the only thing we've got here. And there it is, one line item entry, $2 credit. So now that we've fixed our out of balance, we can go ahead and run our balance sheet for period 19. We've done the recalculate. We're not filtering anything. We're not using advanced report groups that do not include all accounts. So let's go ahead and run a classified report, and we should finally be in balance. There's our total assets, $47,18,196. Total liabilities and net worth, $47,18,196, and look at that, no out of balance, all better. So that's how you fix your out of balance. Don't forget that if you end up doing a one-sided entry, to turn off those security features, because we don't want to allow a one-sided entry typically. You don't want to allow anyone to just at will go in and post one-sided entries. So we always want to go back and turn off the security features that allows for that. Uncheck that option there. Okay, now that we've fixed it, we're good to go. All right, so we've talked about all of the reports. We've talked about how to fix your out of balance. We've talked about how to research to find the out of balance. And here was an example of the report that just had a credit but no debit on a reprint posting report. So that would be a situation where for some reason the debit didn't post. All right, so with that, we're going to go ahead and open up the questions here. All right, no questions? Okay. All right, well, it's been a pleasure, guys. Thank you so much for attending our webinar today. Be sure to check out our upcoming webinars. Our upcoming webinars you can find at the website here. The next one we have coming up is part of our report series. I'll show you that real quick here. So today's webinar was part of our monthly series. We've got the different series going on. Our next webinar coming up on June 10th right here. It's going to be part of the value of reports, and it's the simplicity of running the advanced reporting. Now that's another webinar we're running again to review how to set up the advanced report groups that we were talking about today. I have already done a webinar on that, which you can access under previous webinars at the bottom of this web page. The advanced GL report groups right here. But we're going to do another preview and kind of show how you can use those groups to avoid using Excel to run your custom reports. So you can do it all within Denali. So be sure to tune in next week, same time, June 10th on Wednesday. Our next monthly webinar will be on July 1st, the 7 different ways to discount in Denali. We'll talk about that on July 1st. All right, so with that, I want to thank you all for coming. Be sure you check out the website for the recorded presentations of our webinars. And if you have any questions, give Cougar Mountain a call or send an email to the email address here. And then check out for follow-up communications and access to this webinar in a couple of days. Once we get everything edited, we can get it up there for you. So thank you so much. It's been a pleasure. Hope to see you all again next time, and have a great day.